Might as well keep going. So we're on section 6, chapter 2, making it easy on yourself. Why should you be your CPA's best friend? Why you should be your CPA's best friend. Good accounting equal tax deductions equal lower taxes. Good accounting equal tax deductions equal lower taxes. What are business expenses? A questionnaire. Simple record keeping. Yes, simple. An overview. Good record keeping. A checklist. Okay, all right, let's read this quote. It's a funny thing about life. If you refuse to accept anything but the best, you very often get it. With Somerset Maugham. Case study 22, Pat and Sue. Pat and Sue, the couple I'm about to tell you about, will remain anonymous. No one would want to admit to this situation, yet it happens all too frequently. I received a frantic phone call from Sue. She was getting a divorce and had to file her return separately from her husband. She needed help today. It was, of course, April 14th. Well, we had one day. In most cases of this nature, a late filing would be in order, but the emergency of the divorce made that impossible. I agreed to see her. Little did I know what would ensue. Sue arrived at my office carrying boxes stacked to her eyeballs. You've guessed it, shoe boxes stuffed full of receipts as well as unrelated notes and scraps of paper. Shoving to get in the door beside her was Pat, tugging and pulling at the boxes. These are mine. No, they're mine. They were shouting at one another. It was a scene right out of a Hollywood script. They were both in a frenzy. No one needed to look inside the boxes to see that filing their returns either separately or together would be an impossibility within 24 hours. They had to do something, but no one could help them at this point. They had kept no books. They had intermingled their business and personal accounts, but the worst part was that they would not be honest with themselves, with one another, or with me. Yes, divorces do complicate tax filings. Yes, people do put their receipts and other important papers in a shoebox. And yes, people do commingle funds. But when this happens, be honest and start the long sorting process to achieve order and recovery. Then your accountant can help you to benefit greatly. So they were acting kind of childish, you know. Key points. Value the relationship you build with your CPA. You can profit considerably from it. Plan on visiting your CPA before tax season. Communicate throughout the year with your CPA. Timing is a key issue in preparing your tax returns. Timing is a key issue in preparing your tax returns. Make your record keeping simple by tracking your expenses and keeping proof of them. Why you should be your CPA's best friend. The majority of CPA's work and income The majority of CPA's work occurs during 3 months of the year, from January 15th to April 15th. We are quite possibly the only professional with such an intensive workload during such a short period each year. During that period, each individual, partnership, LLC, LLP, and corporation has a tax return due. The only exception is a C corporation that takes advantages of a year end other than December 31 by using a year end such as June 30th. You will not be one of those grappling for your CPA's attention during this narrow time frame. Make it easy on your accountant and on yourself by adhering to the following recommendations. Do your tax planning before tax season. Do your tax planning before tax season. Keep in contact with your accountant regarding tax planning issues as they come up. If you're buying or selling property, getting married or divorced, or undergoing any other major change, the input from your CPA can be invaluable. Okay, if you're buying or selling property, getting married or divorced. I'm parked right here, like, fucking people are retarded, man, for real. Act like they've never seen a person before, man. Okay, so if you're buying or selling property, getting married or divorced, or undergoing any other major change, the input from your CPA can be invaluable. That makes sense, because if you're like a single person with money, you would probably be more trustworthy with you should be more trustworthy with your money with your accountant and in the decisions you make. So if you're getting married or you might get a divorce, you got to tell your CPA how's it going to affect your pockets, you know? How's it going to affect your business? A few months before the fiscal year end of your business, make an appointment to discuss projected income. A CPA can do a great deal of your work at this time. Remember, prepare your tax appointment. Prepare for your tax appointment. Individual return. Assemble all W-2s, 1099s, interest and dividend income, 1099-Bs, reporting sales, and miscellaneous source of income statements. If you have rental income, list rental income, excluding deposits and expenses related to the rental unit. Note, if you receive a 1099-B, a year-end statement that reports sale of stocks or property, be prepared with information on the basis, cost plus improvements, and date purchased of the item sold. This is the single most troublesome item for most CPAs. Take responsibility for your own financial situation. Be prepared with information on the basis, cost plus improvements, and date purchase of the item sold. This is the single most troublesome item for CPAs. Take responsibility for your own financial situation. Assemble forms for 1098 mortgage interest, property tax payments, car registration fees, itemized charitable contributions, medical and health insurance expenses, and other deductible expenses. Most CPAs will provide an organizer which shows the previous year's sources of income and expenses. This form can be invaluable in helping you jog your memory as well as reducing the amount of time that your CPA needs to spend preparing your return. The key is the more organized your information is, the less time your CPA will spend sorting. The less time the CPA spends doing such things, the more time he or she can allocate toward analyzing your tax situation and helping you with future planning. Additionally, the less time, the lower the rate. Partnership and corporation returns. Provide a copy of your year-end bank statement and bank reconciliation for all business bank accounts. If you have a computerized accounting program, provide a comprehensive general ledger, trial balance, balance sheet, and income statement. If your system is manual, categorize and total expenses by category. Your CPA will do a cash proof on your bank account. This means that he or she will take your beginning bank balance, add deposits per your categories, and deduct expenses also per your categories. This should equal your ending reconciled bank balance. If it doesn't, someone is going to have to take the time to find out why. If that someone is your CPA, that will add more expense to your accounting bill. Itemize any business purchases that have been paid for personally. Itemize any business purchases that have been paid for personally and for which you have not been reimbursed. I prefer to reimburse myself from the business as I go so that I don't forget anything. Itemize major equipment purchases. Generally, this is any piece of equipment that costs more than $500. In other words, I would list the $2,500 computer, but not the $10 stapler. The $10 stapler is an office expense. Provide a copy of all Form 941s, payroll tax returns, and W-2s for the year. Provide copies for all new loans or notes the business has incurred. For example, if you bought a new vehicle, make a copy of the sales agreement. Be prepared for and not annoyed by questions. Your CPA will almost always have questions. The better your accountant understands your business, the more he or she can help you. List information. Always feel free to call your CPA if you need to, but remember that your CPA makes money by selling time, so expect a bill. Be concise with the specific information relating to your question, especially if you are calling during tax season. It seems that the people who complain about bills for just calling their CPA with the question are almost always the people that call frequently and ramble on for 30 minutes trying to explain their situation. That's fine, but you will pay for it. Keep your tax backup. You are responsible for canceled checks, invoices, and the like that prove your deductions. Your accountant is not. A good rule of thumb is keep everything for 5 years unless it is specifically related to the basis of an item. For example, keep invoices and canceled checks related to improvements made to your home forever or until 5 years after you sell the home. If you receive a letter from a taxing authority requesting or questioning an item, contact your accountant immediately. Usually your accountant will need a copy of the letter before comment can be made. Always request that a copy is faxed to my office or dropped off immediately. The IRS gives you plenty of notice before it liens your accounts, but you have to give immediate attention to those notices. The working relationship that you establish with your CPA can be the single most important factor in your own business success. The working relationship. The heart of that relationship is good communication. Keep the lines of communication open and you both will be happier and you will prosper. It's making me kind of tired. I got about 4 more pages. The CPA's favorite list of do's and don'ts. Do your tax planning before tax season with your CPA. Contact your CPA regarding tax planning issues as they come up. Go over protected income with your CPA before corporate year end. Prepare for your tax appointment individual return. Assemble all W-2s, 1099 interest and dividend income, 1099-B, reporting sales and miscellaneous income, rental income, sales of stock or property, 1098 mortgage interest, property taxes, car registration fees, itemized charitable contributions, medical and health insurance, other deductible expenses. See last year's organizer that your CPA gave you. Partnerships and corporations. Assemble bank statements and reconciliation for all business bank accounts. Take your beginning bank balance, add deposits per categories and deduct expenses per categories. Itemize any business purchases for which you have not been reimbursed. Itemize any major worth more than $500 equipment purchases. Provide copies for all new loans or notes and list information on any item sold. The key is the more organized your information is, the less time your CPA will spend sorting. Be prepared for questions. Keep your tax backup for 5 years. If you receive a letter from a taxing authority requesting or questioning an item, contact your accountant immediately. The working relationship you develop with your CPA should be based on good communication. Keep communication open. Notify your CPA when there are major changes in your life, such as marriage or divorce. Making tax record keeping simple. We all pledge we will take full advantage of our tax deductions, but the real key is getting those all-important tax deductions is not in brilliant strategies or planning. But the real key is getting those all-important tax deductions is not in brilliant strategies or planning. The real key is in the drudgery of filing and tracking all of the receipts. Don't pay $1 more in taxes than you have to. There are 2 important aspects to simple record keeping. First, you need to track your business expenses. This can prove invaluable for planning throughout the year. You can see at a glance where you are making money and where you are losing it. It is also important to track these expenses so that you can easily prepare or have your accountant prepare a financial statement during the year for banking or licensing purposes. And of course, you need to have the expenses summarized for tax preparation at the end of the year. The system you set up to do this is called an accounting system. Accounting is simply a process of recording the cash flows in and out and other non-cash expenses. Secondly, you need to keep proof of expenses in case of an IRS or other taxing agency audit. This is done with a good filing system. Falling asleep, Loki. At some point, you should familiarize yourself with some basic accounting terms. Don't make the mistake some new business owners make of assuming that their accountant will handle everything. The accountant often only sees your records once a year and then after the fact. By then, it is usually too late to correct any problems. And you can be sure that no one will be as interested in your business as you are. The first step for any accounting system is to select a chart of accounts for your business. A very basic chart of accounts follows on page 190. Feel free to change it to adapt to your business. You can set up a system with or without a computer. If you use a computerized system, look for a double entry system. Examples of this are Peachtree and QuickBooks system. Look for a double entry system. Examples of this are Peachtree and QuickBooks Pro. Quicken is not a double entry system. Make sure you take the time to do the tutorial that comes with the program. If you do not use a computerized accounting system, consider using the OneWrite or Safeguard system. This records your checks on a ledger sheet that spreads the expenses. Contact a Safeguard representative in your area for a setup of the system. The representative will be able to walk you through the basic expense categories and how you get your accounting system off on the right track. If you do not use a computerized accounting system, consider using the OneWrite or Safeguard system. This records your checks on a ledger sheet that spreads the expenses. Contact a Safeguard representative in your area for a setup of the system. The representative will be able to walk you through the basic expense categories and how to get your accounting system off on the right track. If you choose to not do this, at least get a business account checkbook that has stubs on the left-hand side. Record whom you write the check to and what the check is for. Supplies, for example. Initially, the stub system may seem much simpler, but you will find that you have to do a lot more work at year end than with the other system. A good accounting system is only half the battle, however. You must also keep appropriate backup for expenditures in the form of invoices, receipts, etc. Get in the routine of filing receipts. I have an in basket on my desk where I put invoices and I faithfully file them once a week. I strongly advise you to do the same. If you do not keep good records, you will be creating more work for your accountant and more expense and difficulty for you. Once you are in the habit of good record keeping, it's really very easy for you. Let me read this quote. People seldom improve when they have no other model to copy after. That's true. I was thinking about that earlier. How we copy people, or because I do music and I might sound like I might make a song that I sound like this person. I might make a song where I sing and I sound like this person. You know, we're like that. You know. So people seldom improve when they have no other model to copy after. So it's okay. You know. Record keeping checklists. Learn basic accounting procedures. Establish a chart of accounts. Decide on a computerized or manual accounting system. If you choose a computerized system, pick a double entry system and be sure to do the tutorial. If you choose a manual system, consider using the OneWrite system. If not, make sure your check register has stubs on the side that you can use to record expenses. File receipts by vendor on a routine basis. Keep those receipts for at least 5 years. The rewards of a good system are many. You will absolutely pay less in taxes if you carefully record your expenses. You will pay less to your accountant at tax time if he or she doesn't have to reconstruct your records, and you can sleep better at night knowing that your business is in good order. Good accounting equal tax deductions equal lower taxes. What are business expenses? A questionnaire. Which of the following expenses are applicable to you? Cost of goods. Do you sell products? Office expenses. Is your office in your home? Do you have a storefront for your business? Employees. Do you have employees in your business? If not, are you interested in providing imaginative and tax-deferred or tax-free benefits to yourself as an employee? Advertising/promotion. Do you promote your business? Do you have uniforms for your business? Do you provide giveaway items to future clients? Charitable contributions. Are you interested in learning how to take deductions for your obsolete business equipment? Are you interested in learning how to take deductions for your obsolete business equipment? So if, I guess you just you'll donate that equipment you don't use or something? Dues and subscriptions. Do you subscribe to magazines you can write off? That's pretty cool. That's like something like if you own like a mechanic, you know, when you go to a mechanic or a doctor's office, how they have the magazines right there on the table. So you can write that off for your business. Education. Do you, your spouse, or children plan on taking any courses? Traveling and conventions. Do you travel either inside or outside the United States? Do you attend conventions for your business? Equipment. Have you made or do you plan to make any equipment purchases? Have you contributed any equipment to your business that you have personally purchased? Vehicles. Do you have a vehicle that you use in your business? Do you understand the advantages and disadvantages of buying versus leasing and how to avoid luxury auto limitations? So I'm using my truck for my small business of recycling, and this is my mileage, you know. I got to keep track of my mileage now. My mileage, my oil changes, you know. Do you want to take full advantages? Dividends. Do you want to take full advantages of lower taxes on dividends you earn? Accountable and non-accountable plans. Are you interested in providing benefits to yourself, no tax effect? Examples: cafeteria plans, dependent care, achievement awards, education assistance, group term life insurance, and health insurance. Athletic facility. Do you plan on purchasing any athletic equipment that you want to write off? Meals and lodging. Does your company provide you with meals or lodging as a condition of employment? Pension plans. Are you interested in providing for your retirement as opposed to working forever? Are you interested in putting away money for your retirement that will come back to you totally tax-free no matter where you live? Conclusion. Get your papers and receipts in order before going to your account so you can profit most from your relationship. Plan on visiting your CPA before tax season. Let your CPA know what's going on with your business all year long so you can do some pre-planning and saving you dollars in fees and in taxes. Make your record keeping simple. Track your business expenses. Keep proof of your expenses. Never mistake motion for action. Ernest Hemingway. Never mistake motion for action. Ernest Hemingway. All right, that was the end of section 6, chapter 2. Peace, y'all.